Here's a look now at what's happening for next week. Our Friday Market Monitor guest is Bernie Schaefer, chairman of Schaefer's Investment Research. On the economic calendar, Tuesday, existing home sales. Wednesday, April new home sales and durable goods. Thursday, first quarter GDP and weekly jobless claims. Friday, we'll see April's personal income and spending and the University of Michigan's final May reading on consumer sentiment.
My guest market monitor this week is Mark Leibovit, Chief Market Strategist for VRTrader.com. Welcome back to Nightly Business Report, Mark.
Thanks, Paul, for having me back.
Wall Street staged a rather impressive rally this week, as you know, and as a market technician, I'd like to know if you think the upturn has staying power or it's just a flash in the pan.
Well, maybe it's a dead cat bounce, Paul, but I think it's a traditional summer rally. We were looking for at least a halfway retracement of the down move. We have broken some trend lines. Volume has accompanied the move, so we're long here giving it the benefit of the doubt. As a trader, I would say we need to pull back for a couple days next week, but I think there's more to the rally. It's funny, in sort of perverse in a way, the summer rally might be over by the time we hit summer June 21st, so I'd be careful. Our intermediate work said that we get a rally here this summer and then possibly down to new lows in the fall, but ultimately we go with our volume and our indicators.
Okay.
Long here, but we're keeping the foot in the door for later in the year.
So by the end of the year, we could actually be lower than where we are.
I believe we could be under the lows that we saw in April. So, but again, we're going to go with the volume. So people have to follow us carefully.
Well, that's what the VR stands for, and the VR.com. It's volume reversal.
Right. Volume changes, we're going to get short.
It. Okay. Now, you have been bullish on the long-term outlook for gold for quite a while, but it's been having a hard time recently. And we have some charts of the XAU Gold Index, and let's start with your forecast for 2004 and what the index actually did. We see it there now.
Okay, the 2004, we had a sell signal right in January. We did make a lot of friends among the gold bugs, but we got out, and we trade them. But the model said get out in January 2004. We were pretty much out the whole year.
Now let's have a look at the 2005 forecast for the gold index.
It's very choppy this year. It's looking choppy to sideways, lower, so we're not getting a clear buy signal looking at this indicator yet, and I think that's partially a result of what's happening in the dollar.
But it looks like you think gold's going to be lower by the end of the year.
I believe so. It's very depressed here, particularly the shares, not the metal itself. But we're not getting confirmation of a bottom yet. Right. So it's tempting. They're cheap, but we're doing a little fishing, but I think we're early.
Now, you wanted us to see a dollar index chart as well because the dollar moves inversely with gold. There we see your 2004 index and forecast. Go ahead.
2004 was basically telling us that you'd be looking for a possible turn in the dollar, and everybody's been bearish on the dollar for good reason for the last few years. But since 2004, and particularly now coming forward, our work is saying more of a rally.
Looking forward at 2005, we have that chart.
More of a rally, sideways to higher, but a little bit more of a rally in that dollar. So since dollar and gold tend to trade inversely, we hate to tie markets together, but that's the way it's working. I would say be still a little careful about the gold and look for a higher dollar this year.
Okay, now on your last visit with us on November 19th of last year, you gave us 3 buy recommendations. Let's have a look at how they fared. Newmont Mining, one of those gold stocks that has been hit, down almost 28%. Still with it?
Big picture, very bullish.
Okay.
Depends how you trade them. We're traders, but on a long-term portfolio, you want to be in it.
Okay, Standard & Poor's 500. The old spiders up 1.4%.
Stay with the diamonds and the spiders because we're in a summer rally.
We'll have a look at the diamonds, how they compared to where they were then, and absolutely unchanged. They've been a little higher, though.
Well, NASDAQ's been doing better, but the blue chip should participate in the summer rally.
Okay. How about any new buy recommendations of individual stocks?
Okay, I'll give you a couple ideas. Coca-Cola is one of our favorites. It's not a favorite of Wall Street's, but it's coming out of a base. There's volume accompanying the move. I think it's a 10 or 15% move. That's KO. Do not own it personally, but love the stock. A cheaper name to give the low-priced players a shot would be America West Airlines, AWA.
Okay, let's have a chart of that, and a lot of that in the news this week.
Yeah, and it's coming off a bottom. We're not long it personally, but we're recommending it. I think this could be an $8 or $9 stock. It's around 5 1/4. Good volume coming off a big base. So these two are good names, and the way we like them is because of the bottoming formation with volume.
Okay, do you own American West personally?
Do not. I fly it all the time though.
Do you? Okay.
And I don't drink Coke.
Okay, but you like the stocks, nevertheless.
I like the stock, yeah.
Okay. All right, I think our time has run out for the moment, Mark, but thanks very much for being with us once again.
See you next time. Thank you, Paul.
My guest market monitor, Mark Leibovit of VRTrader.com.